Hello, everyone. Welcome back to our channel. Today, I will compare cash versus QQQ versus QLD versus TQQQ over different time frames, starting from 1999 to now in 2024. I will also compare dollar cost averaging, DCA, investing once a month, versus lump sum investing, invest only once and hold. DCA involves investing a fixed amount of money at regular intervals over time, for example, buying QQQ monthly for 30 years. In contrast, lump sum investing means putting all your available capital into the market at once. To find a better QQQ, QLD, and TQQQ investing strategy, I will show 9 simulation cases of cash versus QQQ versus QLD versus TQQQ. As a quick recap, QQQ tracks the performance of the Nasdaq 100 index, offering broad exposure to large international and U.S. companies in sectors such as technology, healthcare, and consumer discretionary. On the other hand, QLD seeks returns that are 2x that of QQQ, and TQQQ seeks returns that are 3x that of QQQ. We started on the 10th of March 1999 as QQQ began on this date. For QLD and TQQQ, we used QLD simulation by calculating twice that of QQQ and TQQQ simulation by calculating 3 times that of QQQ. As you can see in this graph, QLD and QLD simulation are very similar over the years. As you can see in this graph, TQQQ and TQQQ simulation are very similar over the years. We also included expense fees in all simulations as follows. Expense ratio. Cash, 0%, QQQ, 0.20%, QLD, 0.95%, TQQQ, 0.88%. These expense ratios are all confirmed from their own websites for QQQ, QLD, and TQQQ. Case 1, dollar cost averaging. Investing $1,000 once a month from the 10th of March 1999, QQQ inception date, to the 7th of June 2024, for 25 years. Okay. Now, let's start the first and most important simulation. We will compare cash versus QQQ versus QLD versus TQQQ if we invest $1,000 once a month from the 10th of March 1999 to the 5th of June 2024 over 25 years. Who is the winner? By investing $1,000 every month for this 25-year period, you would get the following investment returns. Cash, $370,044. QQQ, $2,455,326. QLD, $7,315,893. TQQQ, $13,524,822. Compared to cash of $370,044, you will get more than 6 times the investment return from QQQ, more than 19 times the investment return from QLD, and more than 36 times the investment return from TQQQ. However, even in this case, you should be careful. If you had to take all your money on November 24, 2008, TQQQ was not a good choice as TQQQ lost about 90% of your cash value. These are your returns on November 24, 2008. Cash, $135,327. QQQ, $81,876. QLD, $37,265. TQQQ, $15,435. Therefore, you need to know when you will need to exit your investment, how many years you can invest for, and whether you can keep investing even if you lose more than 90% of your investment when you invest any leveraged ETFs such as QLD and TQQQ. When can you recover as a TQQQ investor? In this case, you had to keep investing until 2011 when TQQQ and cash values are similar. If you keep investing in TQQQ, your TQQQ value will be even better than QQQ and QLD around 2013 and 2014. Then you will see the exponential growth of TQQQ and QLD over cash in the rising bull market until 2020 before the pandemic. Despite about an 80% dip in 2020 during the pandemic and a significant downturn in 2022, TQQQ and QLD have survived so far. Let's look at more cases. Case 2. Dollar cost averaging. Investing $1,000 once a month from the 10th of March 1999, QQQ inception date, to the 7th of October 2002. The lowest price during the 2000 to 2002 stock market crash, over 3 years. In this case, we highlight the significant drawdown even when investing every month using DCA. Here are your investment returns. Cash, $46,742. QQQ, $18,864. QLD, $7,627. TQQQ, $4,034. In this scenario, you lose more than 90% of your investment in TQQQ. The maximum drawdown was minus 97% for TQQQ and minus 87% for QLD. Expect these drawdowns even if you are using DCA. Case 3. Dollar cost averaging. Investing $1,000 once a month from the 7th of October 2002. The lowest price during the 2000 to 2002 stock market crash, to October 31, 2007. The highest price before the 2007 to 2009 stock market crash, over 5 years. This period showcases the market's recovery from its lowest in 2002 to its peak in 2007. Here are your investment returns. Cash, $68,135. QQQ, $95,009. QLD, $118,401. TQQQ, $141,210. During this rising market, TQQQ outperformed QQQ. Case 4. Dollar cost averaging. Investing $1,000 once a month from October 7, 2002. The lowest price during the 2000 to 2002 stock market crash, to March 6, 2009. The lowest price during the 2007 to 2009 stock market crash, over 7 years. Even if you start on the same date as in Case 3, extending the investment period to include the 2007 to 2009 crash results in significant losses. Here are your investment returns. Cash, $85,543. QQQ, $56,264. QLD, $28,162. TQQQ, $12,428. Observe how much TQQQ lost. Case 5. Dollar cost averaging. Investing $1,000 once a month from the 11th of February 2010, TQQQ inception date, to the 6th of June 2024 over 14 years. For this period, we use actual QQQ, QLD, and TQQQ prices, starting when TQQQ was launched. The past 14 years have been generally favorable despite significant downturns. Here are your investment returns. Cash, $195,551. QQQ, $762,723. QLD, $2,055,977. TQQQ, $4,406,540. This case shows significant returns from TQQQ, QLD, and QQQ compared to cash. Case 6. Dollar cost averaging. Investing $1,000 once a month from November 22, 2021, when TQQQ had its all-time high price, to the 6th of June 2024 over 2 years. Starting your investment at the peak could be seen as unfortunate timing. Here are your investment returns. Cash, $34,000. QQQ, $43,344. QLD, $51,756. TQQQ, $60,998. Even if you begin investing at the all-time high, dollar cost averaging helps mitigate losses and eventually leads to gains, as evidenced by the recovery by June 2024. Case 7. Lump sum investing. Investing $100,000 just once on November 22, 2021 when TQQQ had its all-time high price and assessing the value on June 7, 2024, 2 years later. In the previous case 6, even if you were very unlucky to start investing in November 2021, your TQQQ value was about twice that of your cash value by using dollar cost averaging, DCA. However, in this case 7, by doing lump sum investing of $100,000 only once on November 22, 2021, the same day as in case 6, your TQQQ value is lower than the cash value in just over 2 years. Here are your investment returns. Cash, $109,807. QQQ, $117,314. QLD, $103,296. TQQQ, $79,572. If you look at the lowest point on December 28, 2022, your TQQQ value was even much lower during lump sum investing. Cash, $102,022. QQQ, $65,558. QLD, $37,224. TQQQ, $19,090. Your TQQQ value of $19,090 was only 19% of your cash value of $102,022 on December 28, 2022, due to lump sum investing. Case 8. Lump sum investing. Investing $100,000 just once on March 24, 2000 when QQQ had its highest price before the 2000 to 2002 stock market crash and assessing the value on June 7, 2024, 24 years later. In this case, you will see another extreme example of lump sum investing. Here, you invested a lump sum of $100,000 only once on March 24, 2000 when QQQ had its highest price before the 2000 to 2002 stock market crash. Now, 24 years later, these are your investment returns. Cash, $150,684. QQQ, $438,122. QLD, $146,698. TQQQ, $10,278. Your TQQQ value on June 7, 2024, 24 years later, is only $10,278, merely 7% of your cash value of $150,684. In contrast, your QQQ value is $438,122, which is 290% more than the cash value and 43 times more than the TQQQ value of $10,278. The worst case is that your TQQQ value was only $20 on March 3, 2009. Cash, $129,022. QQQ, $22,699. QLD, $1,128. TQQQ, $20. Thus, if I had to invest only once and hold it, I would choose QQQ over TQQQ. Never engage in lump sum investing and hold TQQQ as described above. Case 9. Dollar cost averaging. Investing $1,000 once a month from March 24, 2000, when QQQ had its highest price before the 2000 to 2002 stock market crash, to June 7, 2024, for 24 years. This is the final case. We will use the same timeframe as in the previous case 8, from March 24, 2000 to June 7, 2024, for 24 years. However, we will use DCA by investing $1,000 once a month, instead of lump sum investing. Now, 24 years later, these are your investment returns. Cash, $351,239. QQQ, $2,356,910. QLD, $7,265,648. TQQQ, $13,540,375. In this case, TQQQ wins big, rising to $13,540,375, even if you began your investing at the highest TQQQ price before the 2000 to 2002 stock market crash. The final TQQQ value of $13,540,375 is more than 38 times the cash value of $351,239. Again, if you want to invest in TQQQ or QLD, you should opt for DCA rather than lump sum investing. Summary: these 9 cases demonstrate that QQQ, QLD, and TQQQ can be more beneficial than holding cash, particularly when using dollar cost averaging. While lump sum investing has its risks, especially with volatile assets like TQQQ and QLD, dollar cost averaging provides a safer and often more rewarding investment strategy over long periods. If you must opt for lump sum investing, QQQ is generally the safer choice due to its lower volatility compared to leveraged ETFs like TQQQ and QLD. For those interested in leveraged ETFs like QLD and TQQQ, it's crucial to understand that their high leverage also increases the risk of significant losses, especially during market downturns. This approach emphasizes the importance of knowing your investment timeline and your capacity to handle losses, which can be substantial with leveraged ETFs. For those who prefer to avoid such high risks, sticking with non-leveraged ETFs like QQQ may be a better strategy. Just a heads up, this channel is for entertainment purposes, and I'm not a financial advisor. It's important to customize your investment approach to suit your personal financial goals and situation. I hope you found this video useful and enlightening for your investing endeavors. If you liked what you saw, please give us a thumbs up, subscribe to the channel, and ring the notification bell to stay updated. Thanks for coming along on this journey with me.